Welcome to Markets Now. I'm Michelle Rope with Mike Miner, Professional Ag Marketing. Livestock futures to the plus side on Thursday. The grain trade mostly lower except for nearby our July soybeans. And Mike, let's talk a little bit about the grains. The last 2 days we've had higher starts and then we kind of fail taking a shot at some of these resistance levels on corn, beans, and wheat, right?
Yeah, corn down 5 cents or so there. July's been hanging right around the 20-day moving average where we pulled back to some support levels. So it's pretty decent support here, maybe another couple more cents on that July corn. But I really don't want to see it drop too much more than what we already have, Michelle, after we found somewhat of a friendly WASDE report for the corn on Friday. Found a little support, kind of failed at some of those resistance levels, just shy of those gaps. And now we've kind of pulled back, which I think is perfectly fine and somewhat expected for us to do that after a WASDE, after we kind of ran up and failed to take out some major resistance areas.
So, Mike, you think this is a healthy correction, not necessarily topping action?
Yes, if you break below that 453 area on July here, if we continue to get better weather outlooks going forward, then we could start talking that maybe this is like 2014, where we met a peak in the corn market by the end of April or the early parts of May in the low $5 range, which I would argue is a very similar type of stage of the cycle that we're in, very similar price levels. And I'd be curious to see if we follow that type of pattern going forward.
So, from a weather perspective, is the market mentality more that rain makes grain and that kind of trumps any of these possible planting delays?
Yeah, we're shifting from planning delay talk pretty quickly towards weather outlook. If I look at the corn market specifically, corn production located within a drought now dropped another 2% this week. So we're only down to about 12% of the corn production area is experiencing a drought in the United States. And that's the lowest in over a year, well off the high that we had at 70% last June. So very different situation to start off this marketing year than we were at last year at this time.
Yeah. Do you feel the same way about the action that we've seen in soybeans and wheat? I mean, is it a healthy correction here?
I'm a little more concerned about wheat. You could argue this is maybe a double bottom type scenario. I don't know if it's going to hold going forward. The soybean market, I think there's some bigger fundamental problems that we've been experiencing. I know looking at it, a common talk around our office is seeing that November's floating right around that low $12 range. And we want to kind of salvage that number still at this point, especially at this time of the year. So that's been one thing. But I think there are some other problems underlying within the soybean market right now.
So let's talk about a couple of those. One of them, South American weather. Obviously, we've had flooding, torrential rains in southern Brazil. Is that helping to pump up the maybe old crop values for soybeans in the U.S. or the soybean oil market and the rally we saw today?
Yeah, I think you're talking about basis levels increasing out of Brazil, and that's been strengthening a little bit. Most of the private analysts have held their production levels in the high 140s still. They haven't really gone back up anywhere near where the USDA is sitting in the mid 150s. So that's been supporting a little bit as well. I think looking forward, we want to continue to focus on soybean oil stocks being a little bit lower. That was up today. That was one of the only soy items actually trading higher today. So a few of those items have helped support this market, and we'll keep an eye on some slower farmer selling in the soybean market out of Brazil.
So you did see the bull spreads working in the soybeans today. Is that some underlying demand, do you think?
It could be upfront here. Soybean oil popping a little bit higher could be giving us some support, getting a little bit more competitive with Brazil export basis levels. That's going to be helping us going forward. I would like to see more out of the soybean export numbers, and I think that's part of the concern today is that upfront here, we've got some potential to improve demand, things like that. But going forward, we still haven't seen any Chinese purchases for new crop soybeans on our books yet. So that's concerning longer term, especially as we start to talk about the direction that they want to go with their business from here on out. It's no silent story that they're trying to switch more business to Brazil from the U.S. and that pattern continues here, it looks like. So we actually have less on the books than we had during the trade war at this time. So it's pretty concerning. And really, the soybeans are going to be in trouble if we don't have another breaking news story anytime soon here.
So, Mike, do you think that the weather story is over in the wheat market? Wheat was the first to break out here on some of these production concerns. Is that done?
Not necessarily. I think there's still a story to be said about what's going on in southern Russia, tensions in the Black Sea, things like that. So I continue to want to watch what that wheat market's doing, but I don't think the big influencer is what's going on in our backyard, in southwestern United States here with our production. So a few of those areas have got some storms, and I think that's helped really bring this price back down a little bit. But however, I think the big story when it comes to the wheat has started, and I think it's more Russia based. We'll watch that going forward.
Corn and soybeans, how much should farmers be selling or be sold at this point, you think, on this rally that we've had?
Yeah, I want to be aggressive, and I think old crops particularly. Once planting wraps up here, the trucks are going to continue to keep moving. We've really seen it already as we've had little breaks where areas have had rainfall cut off planting windows for a little bit. The trucks have really been flowing towards ethanol plants and processors specifically. And on this rally, they've been able to weaken up the basis a little bit on the soybean side, especially. The corn side, they haven't weakened up as much. We saw a little bit this week, but I would really watch for corn basis to break here after planting season. So I think it's important to get that old crop really moving on basis and futures around these levels.
So, cattle market ending to the plus side, and the box beef values have been on fire. Will this market be able to continue to move higher, do you think?
Oh, we've had a steady march higher in box beef values, and that's supported buying in the cattle futures. We've had a higher beef trend. We've had a slower slaughter pace. We've had positive outside market development. That's really sent this August cattle up to about the top end of the 6 week trading range that we've been in. And I think, when you look at other stuff outside of the cattle market right now and the influence that's had on it real recently is really big. We saw a cooling CPI number yesterday and a decline in the US dollar, the rally in the stock market. Those have all boosted commodities all the way across the board, but especially the protein markets. So going forward here, it's at a very good time of the year to see appreciating values in these cutouts. And beef is kind of leading the way here, it looks like, which is good because from a consumer perspective, you see steaks in the beginning of the year and hot dogs at the end of the year for the summer season. So that's starting to look a little bit more normal, even though we had gone from a high level sideways through the winter. And now we're finally starting to see a little bit of that appreciation. And as long as the consumer feels like they can continue to keep paying up for a little bit less, I think we'll be just fine when it comes to this cattle complex for the short term. Longer term, I think there are some other things we've got to watch out for down the road.
Yeah. In the hog market, are we following cattle there, or are the funds back in here buying after we had that over $10 correction?
Yeah, I mean, choice beef, the stock market, all helping the hog market at this point. But today, I think, was a lot about managed money. We had a broad sense of, the stock market popping above 40K for the first time ever. We saw some money flow move back into the protein markets, and this was a really big week fundamentally for all buying in proteins ahead of this Memorial Day weekend. What I'm impressed by was what we saw managed money liquidation through that golden roll time frame. But the index funds, they actually added to their record long position that they've had. So they wanted to stay long today. And I think that was a really nice thing to see. Short term here up front, we needed to see a little bit of a basis correction. I think we're starting to get that after May came off the board here. We got to get that index moving higher. Cutout being above $100 here is starting to be a little bit more of a win. I know most of it's been belly driven, but we're holding that level now for 3, 4 straight days. That's been really nice to see when looking at it that way. And we've hit some technical spots, I think, too, in this hog market. I think that shouldn't be slept on as we hover around some good short covering here that we've seen, and we've hit some nice technical spots. Let's get past this Memorial Day, get into some smaller numbers, and we'll see, that the futures are starting to acknowledge that a little bit here, I think, Michelle.
Okay, thanks, Mike. Mike Miner with Professional Ag Marketing. That is Markets Now.